Okay, good afternoon, everybody. Today's October 22nd. This is your weekly take on the market. I am your host. My name is Scott St. Clair. I'm a Premium Product Group Manager here at Investors Business Daily. Here is the disclaimer. Take a moment to look at this. I will talk about individual stocks, not buy or sell recommendations. So the market gauges are green. The market's not super great, but it is in an uptrend. It is what it is. Leadership is it's very diverse. There's it's not like so obvious, like the sometimes like, oh, it's software as service is the leader or solar is the leader. I own kind of a plethora of different types of stocks. I guess from a sector standpoint, most of them are energy resource related, but there are a couple of really good growthier names out there. So there's if you're going to own 10, 15, 20 stocks, there's merchandise. If you're going to own a mutual fund of 200 stocks, you maybe are struggling a little bit, but that's a different objective. And then hopefully your portfolio is green. I don't know how I feel about showing this every week. I don't think you should put so much pressure on yourself that, oh, my portfolio has to be green because the market's green. Because sometimes when the market's not that great, you could be fine, with your portfolio. So I do track my performance monthly. So for the last, I think 11 years to exactly each month, how much I made, what the market did that month, or how much I lost, what the market did that month, and then all of my portfolios. So I gotten very serious about it when I came on board Investors Business Daily. I used to track weekly, and I just felt like it just put so much pressure on me every week to try to win, to make money, and just causes you to, I don't know, I didn't think it was, it kind of probably led to bad habits of mostly selling too quickly because, oh, I'm having a good week, it's Wednesday, let's go ahead and sell. Well, what does that have to do with whether the stock should be sold or not? But you should be tracking your performance, I think. You should know, if not annually for sure, but I think monthly is enough. It's not that much work. I just dump my statements into a folder on my desktop, and then I open up an Excel file, and I have I track month by month every account I have, and then I can overlay it with a kind of like a line, so I can see kind of the curvature of your performance. It's very little work, and I think it's really the risk reward is way skewed in your favor. You should keep good records. The markets. So I'm going to go through this. Since I'm remote, I'm on a laptop. I'm not super good at this. In fact, this is the second go round for me of recording this. I forgot to share the screen the previous time with the charts. So when I watch the recording before I send it off to get posted to the site, all you saw was a green screen while I talked about the stocks. So human error number one. So I'm going to show you this, and then we're going to go right to markets. Industry groups, markets, industry groups, stocks to watch. You know the drill. And then quote of the week. Okay, so let me make sure I do this correctly this time. And I apologize for the long pause, but I did not want to mess that up. Okay, so NASDAQ. And the NASDAQ is, it's not the best index. It's not leading like it once was. Relative strength. So here's the top best relative strength on a daily, way over there. Look at how much underperformance versus the price is much higher, right? So you made another high here, way underperforming. You made another high here, and basically in line, although a slight underperformance. So you're making higher highs on the NASDAQ, another high here, and basically the same. But the NASDAQ is not the leading index that it once was. The relative strength is poor. And that's because the NASDAQ doesn't have any energy or resource stocks, which is where, coal and oil and gas, et cetera, where all the leadership is pretty much. Not all of it, but most of it. And the S&P does. So the S&P is right now, relative a better index. But the NASDAQ's fine. Today we should have been a much worse day. So a lot of times if I expect a bad day and you don't get it, that's feedback the market's giving you, vice versa. But, and I'll pull up the charts, but well, why don't we do it right now? Facebook, really bad day. Intel, wow, that's a really bad day for Intel. Let me see, down 11%, and now Intel's a total underperformer. I have a good friend that's worked there forever. It was a great stock in the late 90s, and it's just, they just can't find their way now for whatever reason. AMD, NVIDIA are all doing much better. So it's not really on anyone's radar, but it is going to influence the index. And then Snap, which is really bad, right? That was kind of a reminder why some people hate earnings. And I would tell you that I haven't owned Snap for a while because it just couldn't go anywhere. It gapped up on earnings here, never made any progress. Try to break out of this space, never made any progress. So if you're following the rules, you bought Snap here, you probably got stopped there. If you tried it again there, you should have got stopped there. And then it never, ever gave you another buy signal. So hopefully none of you were in that for this bad day. If you were in it, maybe you've owned it for a long, long time, had a big cushion, different objective. Go ahead and review. It's always easier in hindsight, but I would say that there's a couple of signals here that Snap really wasn't performing like it should be. All right, a couple of failed breakouts. The market's going higher, and it's not. It's having a hard time. So they will definitely influence the indexes, especially the Nasdaq. The S&P, I think yesterday, Thursday, it made a new high. Today was kind of a non-event. IWM and EEM just going sideways till the end of time, I guess. They'll just build like 60-year bases, and maybe you guys will finally not have to hear about them from me, because I don't know, they just never go anywhere. I'm always optimistic that they could, but so far nothing has really happened in these groups or these indexes. So let's pull up the industry groups. And energy, coal still number one. Oil and gas, finance, consumer loans, that's UPST. Maybe we'll pull up that stock. Oil and gas, oil and gas, oil and gas. And you get the idea. Way down here, oil and gas as well. So energy is the main driver of the indexes as we sit here. And a lot of the stocks there are extended and out of buy points. Hopefully you already have some exposure there. They've come out of good bases. APA, DVN, OKE, and I still own VAL, which is more of a speculative play on the energy group. Like offshore drilling is probably needs the highest price of oil, but I would imagine it would have the greatest margins, because of the, it's a lot harder to do that. But, there's stuff in there. Hopefully you guys own that. I missed the whole energy coal move. I have not owned anything there. And then UPST is, really driving this group. So let's pull up the stocks. Let's go to UPST. And I think I was on IBD Live on this day, maybe, and I saw what everyone else saw, potential high tide flag, and I just couldn't bring myself to buy it because I felt like everybody sees it. And, right from Bill's book, if it's obvious in the stock market, it tends not to work. And, honestly, it worked enough that I probably would have been out and would have made a little bit of money. But if you're not active, you're staring at a small loss right now. So UPST is probably the leader in the market as far as the growthy area. If you want to choose a firm, I can't argue that as well, AFRM, but UPST is on everybody's radar. and came out of this long base. But I've traded it before. I traded it here, traded it here, I traded a little bit here, and unfortunately that my process is to buy it and sell into strength, buy it, sell into strength, and then avoid all this sideways. But then sometimes that works great in these two instances, but in this instance I left a lot on the table. So let's pull up a firm, another one that's on people's radar that's acting really well. So there is some stocks in this area that are holding up. I mentioned Devon, DVN. Now maybe it needs a new base, maybe it needs to pull back to moving average, but nice move out of this large consolidation. And then APA broke out as well. OKE broke out. They're not lighting the world on fire, but they're holding their gains and staying in there. I think Cleveland Cliffs had a good day today. I don't own that and haven't in a while. It's kind of a back and fill monster. Like, it looks really good, then it fills. Looks really good, then it fills. So maybe one day it'll get going, but it must have had a really strong earnings report right there. Mosaic, which I do own, is a little slower, and I'm trying to be patient with it. It's hard, but it's not doing anything wrong. It just kind of does its own thing each day, up or down 30 cents. As long as it stays above my buy point, and the relative strength doesn't lag. Like if the market keeps going up and it goes sideways, that'll bother me. But as long as it just holds, I'll just kind of give it some room and see, I've got earnings to consider here in 10 days. And then GTLB, which I mentioned last week, but I like that. It's a good name for animal spirits of the market, which is important. You really want to see, are the institutions willing to speculate? And now when I say that speculate, I mean, they're not buying, the SPACs up 400% on the day, but they're willing to buy names that, people will say are overvalued, right? Stocks with no earnings are high on people's overvalued list. Bill would say it's an auction marketplace. Everything pretty much sells for what it's worth. I'm a big believer in that. So if the institutions are willing, it IPO'd at 77 and they're willing to pay 90, 100, 110, they're willing to add to the position on the way up. That's a good sign for the overall market and obviously for this name. Now, if you're active, you've got like almost an IPO base here. If you're looking for a proper buy point, then you're just waiting. It might just be on your radar as something possible down the line. And then there was one other, Tesla, which is another stock I really like to watch for the market. Now it's coming out of a really long base, and I wouldn't buy this pivot coming out of a long base in this market environment. If the market was down 50% and Tesla was coming out of this base, that'd be a different story. Like if we'd been in a bear market for 3, 6, 9, 12 months, something like that, that would be a much different story. And then it would be the risk reward, I think, would be in my favor. But I think there's other places. If you're active and you're following IBD Live, or, guys mention Tesla all the time on Twitter, obviously. But there were some other areas in there that you could have bought Tesla if it was on your radar. Breaking above 700 down to 648 would have been tough. Breaking above 730, this one-day shakeout, but maybe this pivot you at 765 would probably be an area where you could have got in, or maybe up there. So if it's on your radar, there's probably some earlier entries. It's holding up really well. I think it's a bellwether for the market. NVIDIA, another great bellwether for the market. It doesn't mean that it needs to be bought coming out of the space. It just tells me that it's hard for me to believe the market's in trouble if these stocks are holding up. Tesla, NVIDIA, new issues. It's just hard to be bearish. I mean, I just don't see how you can be bearish. You could be neutral. You could be, it doesn't mean you have to be pedal to the metal. I'm not. I don't even think I'm 100% invested in my cash accounts, but I just don't see the writing that you can be bearish right here. Now, if these stocks break, then I would say, whoa, Tesla breaks out of a big old cup and then fails. That would be a bad sign, so you just play it day by day, just getting a feel for the market and just ebb and flow with it as best you can that way. All right, let me go to the quote of the day. Okay, so the quote of the day is from Aaron Brown, former chief risk manager at AQR Capital. I feel like I've used one of his quotes before. I got this from a podcast. He's a good listen on podcasts if you search him. If you want anything except money, you're probably going to fail at trading. This is my job. I'm here to make money. Nothing else matters. In other words, you don't want to be right. You don't want to impress your friends. You don't want to tell everyone on Twitter how great you are. You're just trying to move the needle on your account. That's your whole objective, is to move the needle on your account. That's nothing else matters. If you bought Facebook at 30 like I once did, that tells a great story. If you didn't hold it, you didn't have the right position size. In my case, the Facebook is I traded too big, where he says, I'll make mistakes. I'll trade too high, too big, too small, but it's all calculation. And I was morally certain, like they said, that Facebook was going higher. And I was right. Yeah, that was right. It went from 30 to 300. But I just had too much of a position. I just was trying to be too much of a pig in it and didn't handle it correctly. So I just want to make money. That's the objective. And sometimes making money means cutting losses, because every dollar not lost is a dollar earned. So even cutting losses is part of the process of making money. Okay, last but not least, contact information. Reach us at marcusmith.com, 800-831-2525. Next week, no take on the market for sure. I know last week I said there wouldn't be one, but it was pretty easy to do this pretty quickly. And I like doing it. It keeps me on my toes, forces me to stay on top of the industry groups and think about the markets and, articulate my thoughts, right or wrong. I'm sure I've been wrong a ton of times on these videos, but it gets me thinking about the markets. And honestly, without this video, I would not have even looked today. I'm out and about doing some things on the road for fun, and so it's nice to have this for sure. Next week on Thursday will be our monthly webinar, so there will not be a take on the market next Friday. Thank you guys. Have a great weekend. We'll talk to you later. Bye-bye.